The price of a barrel of the benchmark US oil plunged below $0 a barrel for the first time in history on April 20. The US crude futures for May plunged that day to minus $37.63 a barrel. This is the decline of around 305% or $55.90 a barrel. Demand for fuel has reduced by 30% worldwide due to the coronavirus pandemic, which has forced billions of people to stop traveling. Supply of fuel has been far above demand. Because of the oversupply, storage tanks are becoming full and it's difficult to find space. A negative price hence means that producers are paying money to get the fuel stock out of their hands. While this falling demand is key to understanding the falling price, how oil is traded is also a factor in this. Oil is traded as futures contracts at the New York Mercantile Exchange. The sellers of such futures will have to deliver the oil at the contracted price in the contracted month, just as buyers will have to take delivery at the contracted date. As with all trading commodities, there's a huge speculative participation in oil futures trading too. Speculators have to exit from their positions before the contract expiry date. If they fail to do so, they will have to take actual physical delivery of the crude oil on the contracted date. Speculators who had taken large bets on May futures began to unwind their positions on April 20. This was because the futures contracts for May were set to expire the next day. The need to exit the contract in the weak market led to the massive fall in prices.
Prices is good for India in two ways. Number one, it will reduce the oil import bill, which is an obvious answer. In these times of troubled exports and pressure on foreign exchange earnings, the lower oil import bill will be greatly helpful to India because it will help balance out the current account. This is one of the biggest advantages of the oil price fall. The second is, of course, India can build up its strategic petroleum reserve. It now has capacity to hold about 39 million barrels of oil in the underground salt caverns, which have been converted into oil storage facilities in three places in India. They are in Vizag on the east coast, in Mangalore on the west coast, and in Padur, which is near Udupi, again on the west coast. These three places can together hold 39 million barrels, and India has already begun to take advantage of the low oil prices to fill up these caverns at a low holding cost. So the oil price fall is beneficial for consumer countries like India in a big way, though it is a big headache for the producing countries.
Major oil producing nations have now agreed to cut output, and global oil companies are trimming production. But it remains to be seen if those cuts will come quickly enough to avoid a massive clog.